The next slide.
Pardon, I am missing something very important. I see entries for expenditures, not many for total revenues. And so, one is that, and then the other is the sources of these revenues. Is that what you'd like to analyze a little bit more and specify as to the type of fund?
So the revenues up here at the top are interest from the cash and county treasurers. The big dollars that we receive are from bond issues, and they get reported down here under bond proceeds. On this line, we had budgeted $170 million. We have not had any issuances. However, in March, you will see the 135 or so million when we issue the bonds that are currently out on the market now. So we don't get a consistent flow of income except when we do bond issues. And right now we're looking at doing bond issues like every 2 years, other than the interest income that we receive from the county treasurer's office. So it's like,
I would ask you, I didn't know that, so perhaps in the future, could you identify that the source of this fund?
so the source of this fund
Those
is,
are there, yeah. But the smaller amount at the top, who knows what those are?
The other local revenues you're
All-
referring to?
yeah, all the other local revenues is from the county treasurer's office. We get no other income with regard to the bond program other than bond issues and those dollars that are sitting earning interest in the county treasurer's
I
office.
understand, so why don't we write that up?
So I'll change the other revenues to interest income. Okay.
What are the dates for the original budget and the revised budget?
The original budget was adopted in June. I'm assuming the last board meeting in June. And the revisions occur almost on a monthly basis. That the budget does get revised throughout the year, yes. As a matter of fact, this month we revised the budgeted income. So in January's report, this should be $135 million instead of 170.
Timing, the indication from the Fed is that mid-year interest rates may rise. So is your launch in March to preclude that, being caught up in the hikes in interest rates? Bonds are usually the inverse of interest rates in terms of.
I don't know how much effect that's going to have on our interest earnings.
Okay.
We will get a heads up to the county treasurer's office if they start going up. There'll be a lot of speak around the school district finance people with regard to that.
Okay.
Mark, is it mainly true that the March issuance is because we're, getting low on available cash to continue construction? Is that not correct?
That's true. We'll be, I think, down to $10 million by March. So we desperately need that infusion of cash at that time. Yes, sir.
So it looks like the burn rate, the amount of money that we spent on the bond program is about $12 million a month, right?
That's what we're looking at going forward. Now, there'll be fluctuations, like I said, with regard to the invoices coming in. We know we have contractual obligations with regard to these funds, so the contracts are in place. It's just when the work actually gets done and when we get the invoices.
And also what is being done under the contract, because if there's, for example, steel being ordered and purchased in a month, that's going to increase that monthly payment to the contractor. So depending upon where they are with their construction schedule and their schedule of values coming in, that's going to create fluctuations.
And I know you had a question with regard to if the bonds are bid sale or negotiated. And I believe they're going to be negotiated. We have 3 underwriters that are working on this issue. And I can't remember the multiple names of the firms, but we can have that for you at the next meeting.
I understand that staff may be comfortable with the cash flow, since I've never sold $130 million myself. I'm wondering whether, how quickly does that money actually get transferred into our bank account once we actually sell the bonds?
I believe it'll be March. So
almost immediately.
right, the ratings have come out, and those 3 underwriters are working right now on selling those bonds. So they're making phone calls and they're lining up buyers, institutional buyers, with regard to our paper.
And you said that staff is comfortable with the timing of the sale and the pace of our bond program in relation to our cash balance?
Yes.
Thanks.
Any more questions with regard to this slide? So the next slide is this is your cash flow report. These are actuals as of December, and they are projections from January through July. And again, I caution you all that there are fluctuations with regard to the invoicing and the cost of services as a project moves along. Staff is also working on using this same format and doing future year cash flow projections. So we'll be going 4 years out with a similar format. Any questions with regard to the cash flow?
Can you help me understand, there are any actuals, there are, I believe, increases in these amounts, but there's no projected decreases in the next 6 months? I don't understand why there are not any numbers except for zeros on the balance sheet transactions.
Those are harder to predict, and they're part of the cash flow and the expenses. So some of the balance sheet, at least on the asset side, is as we expense the dollars in the capital outlay portion. If dollars are going to an escrow account, they'll go in as a negative amount into the asset, and kind of likewise with some of the liabilities. So they'll be offset by the projected expenditures. I don't know if I was clear as mud on that or not.
No, why are there zeros?
Because as we make the expenses in the capital outlay, dollars are not paid out. I mean, they will get moved down into assets that are not in the treasuries. So money gets moved into an escrow account to the big contractors. I've expensed it in the capital outlay.
Okay, that's where it is. That's, okay.
It will get moved down into that line item as those escrow accounts get money put into them.
So